The US economy has now entered a new phase over the past 2 weeks, and that's the story. We need to find out if it holds water in the data. In the coming week, we should see a lot more data that confirms this. The narrative that the Federal Reserve has completed its rate hiking cycle is gaining traction. The likelihood of rate reductions in 2024 is growing. People still generally anticipate that the US will escape recession, and this optimism has naturally been reflected in the markets. The S&P 500 has gained more than 6% from its latest low in late October. Now, the October consumer price inflation number will be released on Tuesday, and according to a Bloomberg survey, the general expectation is a headline sequential growth of 0.1% and for the core number to expand by 0.3%. The expected easing is broadly attributed to the situation we are in now, where fuel costs have dropped significantly. That begs the obvious follow-up issue of whether or not fuel costs can go any lower. And we have been conditioned to believe that more conflict in West Asia signals a surge in oil prices. And while oil prices spiked momentarily following the incident, since the Israel-Hamas war hasn't spread beyond that region at the moment, crude prices have dropped dramatically. Reduced fuel costs are good news for shoppers, whose spending habits we'll get a glimpse of on Wednesday when October retail sales are reported. And according to a Bloomberg poll, the figure should increase by 0.2% sequentially if vehicles and fuels are excluded. Now, this week's jobless claims figures will be the final major numbers to keep an eye on. And the numbers are rather low, but have recently seen some modest increases. Investors will focus on this data to understand the Fed's rate path. On Tuesday, Chicago Fed President will speak about the economy and monetary policy, marking the continuation of Fed commentary. Goolsbee has taken a dovish stance and putting him in line with the prevalent macroeconomic view.